Healthcare stocks are trading near 52-week lows, and investors are curious if these are buying opportunities. I've recommended several healthcare stocks as buys recently, and in this video, I'm going to compare two of the highly regarded healthcare stocks right now that I have rated as a buy, but investors might be curious which one I like better. And the two I'm going to compare here is Eli Lilly and Novo Nordisk. I'm going to compare these two and evaluate the company's return on investor capital over the previous decade. I'm also going to share with you my proprietary discounted cash flow valuation models for both Eli Lilly and Novo Nordisk, and I'll also look at the forward price to earnings ratio. I've also considered the pipeline of new drugs in development for these two companies, although I won't talk about that very much in this video, but I have thought about that and I have considered that in this evaluation. So let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, the first thing I wanted to evaluate is the return on invested capital. Now, for healthcare companies, this is a critically important metric. The companies invest significantly in research and development to find and discover new drugs, new medicines that generate revenue and profits for the company. The company's skill in this specific activity is one of the most important determinants of the company's success. In this regard, they've both done really well with the return on investor capital. The difference is the trend here. So the numbers are very, very close. Eli Lilly has a return on investor capital of 27.8% most recently, while Novo Nordisk has a number that's slightly below that figure. Still, the trend is more impressive for Eli Lilly in that it's been improving. So a decade ago, its return on investor capital was just 11.5%, and it's now more than doubled to 27.8%. Meanwhile, Novo Nordisk had a return on investor capital up near 70% a decade ago, and it's now down to 27.8%. Eli Lilly has been gaining market share in the critically important GLP-1 drugs, and its pipeline is also strong. Novo Nordisk recently had some difficulties. It's not gaining the market share it had hoped, and investors are a little bit curious about each of these two, right? Healthcare stocks have not performed well in 2025. As I mentioned in the introduction of the video, they're trading near 52-week lows. So now that I shared with you the return on investor capital, let's start talking about valuation. And I'm going to point out several highlights for this valuation model. And let's start with the outcome, right? And then we can work our way backwards. The price I think this stock is worth today, that means today, right now, is $150. The current market price is $64. So I feel like you can get Novo Nordisk stock at an undervalued valuation right now. It's near its 52-week low of $57. The 52-week high was $148. So it's down significantly from its highs. Now, the important elements, the weighted average cost of capital I'm using is 8.5%. The beta for this business is extremely low at 0.67, and it's going to be low for Eli Lilly. It's going to be low for most healthcare companies, and I've talked about this extensively in several videos. The reason healthcare companies and healthcare stocks have low risk and low beta is because of their lack of correlation or lack of strong correlation with the macroeconomy. You think of healthcare, you think of people's healthcare needs. It has almost nothing to do with their incomes, with their wealth, right? Healthcare is when you need it, and when you need it is when you'll get it. You're not going to think about, well, I'm making a lot of money right now, so let me go and seek out some healthcare. That's the way a lot of businesses work, right? If you think about a company like Tesla, when people's jobs are improving, when they feel like they're making more money and their incomes are increasing, they think to themselves, let me go buy a new car. And then they go looking and shopping, and perhaps Tesla is one of the choices. But when people are afraid of losing their jobs, or if their incomes are falling, or if they recently were unemployed, one of the last things they want to do is shop for a car, right? So unemployment is very strongly correlated with Tesla car sales and with any car company. And so you're taking a risk as an investor that the overall macroeconomic outlook impacts your investment significantly. That's not the case with healthcare companies. People need healthcare when they need healthcare. It's not dependent on if they have a job, on if their income is rising or declining. It doesn't have anything to do with that. So that's one less risk as an investor you have to worry about when you're investing in a company like Novo Nordisk or when you're investing in a stock, because there's so many risks you're already dealing with, company specific risks. At least that's one, it's not completely eliminated, but it's at least reduced that risk compared to other companies. So that's why the weighted average cost of capital is so low. And an important thing I look at, and I point this out, is I like to compare the return on investor capital to the weighted average cost of capital, right? And the better this ratio, the more attracted I am to the company. So with Novo Nordisk, the ROIC to WACC ratio is more than 2-1, which is a very attractive ratio. So now let's look at Eli Lilly. So Eli Lilly, my calculation, intrinsic value per share, $1,309. Current market price, $757. So another business I feel is undervalued. And the weighted average cost of capital I'm using for Eli Lilly is 7.36%. The beta for Eli Lilly is lower at 0.48, but again, much lower than the average stock in the S&P 500, which has a beta of 1. Eli Lilly trading close to the 52-week low at $677 a share. So when I look at the ROIC to WACC, again for Eli Lilly, it's actually closer to 4-1 for Eli Lilly because its weighted average cost of capital is lower than the weighted average cost of capital for Novo Nordisk. And the biggest difference is Novo Nordisk has a beta of 0.67. Eli Lilly has a beta of 0.48. That means the stock price is less volatile, which all else being equal is attractive to investors. One more valuation metric I like to look at, and by the way, the data I'm getting is from finchat.io. If you use my affiliate link in the description, you'll get a free 2-week trial as well as a discount if you choose to sign up. The forward price to earnings ratio for Novo Nordisk is at 16, almost half that of Eli Lilly at 29, but you can see both of their forward PE ratios are declining, and you can get these businesses at much lower valuations than you were able to buy them just 6 months ago. So I think they are both attractive. But if I had to pick one of these two, if I could only own one of these two, I would pick Eli Lilly as the better healthcare stock to buy today. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.